In March, gold came within a hair of taking out its all-time highs. Randy Smallwood sees gold from both macro and micro viewpoints. He is chair of World Gold Council. He is also CEO of Wheaton Precious Metals that just announced its quarter. Randy, always great to talk to you.
Always a pleasure, Michael. Thank you.
You called the quarter solid and you even declared a dividend. What do you want to highlight, Randy?
Well, just the fact that we've been continuing to be successful in adding new opportunities, new assets into our portfolio of investments. There's a real strong need for, especially for single asset development companies, to source capital, and streaming is a real effective, and competitive source of capital for those companies. And so we've added, so far this year, two new acquisitions, and expanded an existing one to support an existing partner. And so very happy with continued success, and really happy with the way the portfolio is performing. But end result is we've now got one of the strongest, especially for a company our size, to see 30 to 40% growth over the next 3 to 4 years, or 3 to 5 years. We're really happy with the way this is laying out, and we're still seeing lots of opportunities. So very busy on the corp dev front.
Now, gold equivalent ounces did dip in your Q1, and also compared to Q4, the previous quarter. But you're still on track with guidance, Randy?
Yeah, this year is always going to be leaned towards the tail end of the year, and so I think this number is about 23% of our total year guidance. And given that it's the first quarter, and knowing that Salobo 3 is going to be ramping up through the latter half of the year, which is an expansion of our biggest asset, we've always known that there was going to be weighted towards the tail end of the year. So we're happy with where we are right now.
Someone who's trying to raise money for a project right now, I would assume they'd have less options on the equity side, Randy.
Well, it comes down to on the equity side, issuing shares or doing a stream. And streams, most of those companies, the marketplace hasn't woken up to supporting the higher risk project developers yet, and so the share prices just aren't capturing reasonable multiples. And so issuing shares is incredibly dilutive to the existing shareholders, and that, of course, is who we all work for, is our existing shareholders, not our future ones. We work for existing ones in the hope that they become they stay future ones. But the dilution impact of issuing stock into today's market, especially for those single asset development companies, is just very costly. And that's where a stream is so incredibly competitive, so attractive on a relative basis for the equity side. And debt's always going to be there. Sometimes you have to go to some of the boutique firms, but on the equity side, the stream is by far the most competitive way to source outside capital in building a company.
Is there changes coming to the royalty and streaming sector, Randy? We saw the big M&A announcement. Nomad and Sandstorm announced that combining in that $755 million deal, and Gold Royalty also has been trying to do a deal with Elemental Royalties, which Elemental has rebuffed.
Right. Yeah, there's no doubt. I think it's a law of nature, and I can't remember what it's called, but whenever you see a population climb, there's always going to be some pressure on that population and have it consolidate. And so we've had a look at that, but it's what we've seen is there's a lot of competition in the space, and that competition to get their foot in the door has had to weaken the structure of the streams. And so I think it's really important to remind investors that you should really have a look at how the streams and how the agreements, how the foundation partnerships are structured. And I can assure you, a streaming agreement, a Wheaton streaming agreement, we've got good long life of mine exposure to these assets. We don't have any buy downs or ounce caps, production caps. This is important. We don't have any limited areas of interest where we're restricted down beyond current exploration activities and such. And it's really important in terms of assessing the quality of this, because what we've seen is, to get your foot in the door, a lot of these startup companies have had to put stress on the structure of their agreements, and hence the market doesn't value them as well as they do a good old Wheaton stream.
We mentioned micro at the start. When you're talking to the people that have mine operations, what's their top concern that they're sharing, Randy?
Oh, inflationary pressure right now. Costs on operating side, fuel costs, of course, with oil up well over $100 or over $100 a barrel. fuel is one of the biggest costs at a lot of these operations, and so there's no doubt inflationary pressures at our partner operations are probably one of the biggest issues right now, and we see it all the way across the board from labor. Labor supply is becoming problematic, and just all the way across the board. Inflationary pressures are here. I mean, which of course supports gold in the long run. And I think it only reinforces why gold needs to be a part of everyone's portfolio.
Let's talk about gold. Gold really did perform well off of the geopolitical concerns in March, Randy.
Yeah, and for time immemorial, it's been the solid store of value, the solid measure of value. And in terms of turmoil, gold is a necessary part of everyone's portfolio in terms of ensuring. I always like to just, sometimes I need to simplify things just to understand them. And what is inflation? Let's just define inflation. Inflation is it costs you more dollars. It costs you more fiat currency for the exact same product that you bought a week ago, a month ago, a year ago. And that equates to a devaluation of those fiat currencies. That's what we're dealing with right now, is that currencies are being devalued relative to hard assets. That is essentially what inflation is. And that's why gold is such an important part of your investment portfolio. Is you need that buffer that's got the liquidity, that's got the attractiveness. In the face of all the turmoil we see around the world today, with obviously Russia invading the Ukraine, with the lockdowns in China, gold still stands as a good, strong foundation, and we feel we're very optimistic. We still think that gold has got a good, strong leg up from where we are right now.
The main beneficiaries seem to be those large gold miners. I note that Barrick and Newmont are up 20% year to date. GDXJ rather just up 2%.
Yeah, there's no doubt the higher prices. The challenge that those big gold miners will have is of course the same inflationary pressures we're talking about around the world are also going to have an impact on their operations, and so that's going to it'll eventually catch up to those operations whenever we see the price move up. Again, one of the strengths of the streaming model is that our costs are fixed, our operating costs are fixed, and our capital costs are fixed, and so we don't give our shareholders inflationary pressure. They're protected from inflationary pressure in the streaming business.
How does a pipeline of projects look now, say, compared to a year ago, Randy? Is there more opportunity out there for a business like yourself?
I would say it's about the same as it was a year ago, maybe a little bit lighter, but we are focused still. We've got a number of assets that we're in various stages of review. Happy to report that we're back to doing full-on site visits and in fact getting back to some of our existing partnerships and operations and getting tuned up. We haven't been there for a couple of years, and it's always good. We do take a lot of pride in terms of our partner relationships, and one of the areas that we deliver value is to come in and have a look at the assets and be a third set of eyes that sometimes can see opportunities to help or improve or optimize at these sites. And so it's been challenging for the last couple of years because that's always tougher to do over a Zoom call or any of the virtual meetings that we've had. Excited about that. The team is back out again. We're doing lots of travel, having a look at some of these new opportunities, and fully expect to announce at least a couple more before the end of this year.
That's interesting, Randy, because I would have thought with, the financing picture was so good a year and a half ago with, the support that was coming in during the pandemic. I thought there would have been more advancements or just kind of a larger pipeline.
Well, and I'm not saying it's all that much smaller. It's just that we've had a lot of success. We've been tracking about a deal a month over the last while, and so I think we sort of cleaned out the portfolio a bit, and we're making space for some new projects. And so from a equity, again, going back to the single asset producers, which is where the biggest opportunity set is for us right now. There's still no better source of equity capital than a stream, and so we're still seeing lots of appetite on that side. But the one challenge that we are facing as an industry is that the shareholders are not supporting anywhere near as strongly as they have historically the higher risk, the exploration, the greenfields development companies, the ones that are out there exploring and prospecting. There's nowhere near as much support for that. And eventually that's going to have a downstream impact in terms of a lack of new projects, a lack of new opportunities. It's been a long time since we've seen promising new discoveries that have blossomed up, especially in the gold space around the world. And if we don't find a way as an industry, as a society, to start investing a bit more on that exploration side, we are going to have a bit of a lag in terms of new opportunities coming into the space. And that only, of course, bodes well for commodity prices, and eventually the commodity prices will be part of that solution in terms of driving that exploration. But we do need to step up more as a society and recognize that if we're going to continue electrifying the world and bringing more copper into the world and other battery metals and such, we've got to start exploring, because it takes a long time from the exploration stage to actually produce any of these metals.
Lastly, Randy, you're in New York and you had a bit of an occasion. What was it?
Well, our chairman, Doug Holtby, retired. This was his last board meetings. And so we had our board meetings here at the New York Stock Exchange. They were very generous in terms of offering us board space. And on Wednesday, we got to ring the closing bell at the New York Stock Exchange. It was a fitting tribute, I think, a fitting end to Doug. He's been an incredible chairman, 15 years with the company, well, more than that with the company, but 15 years as chairman. And of course, I've worked with him from over 20 years, back to my old Gold Corp in the original Wheaton River days. And I think it was a fitting way to finish off his time here. And we're going into a board renewal process. George Brack is our new chairman, and who knows the company very well, and really excited about where we're going to go. But this was a great way to send off Doug.
Randy, always a pleasure.
Yes, Michael, thank you.
He is CEO of Wheaton Precious Metals and Chair of World Gold Council. It's Randy Smallwood. My name is Michael McRae, and you're watching Kitco Mining.